On this first Tuesday of December, the Reserve Governor and the Board met as we enter the festive season, and they kept the cash rate on hold at 1.5%. Now, I'm going to come back to what's happening in the domestic economy, but first of all, I want to talk more broadly about what's happening in the global economy, and most namely, the biggest sort of story of the last 6 weeks and certainly into November has been the stock market corrections that we've seen around the globe on the fears of a slowing global economy. Now, you can also factor in, the sort of spike that the US economy got and the US share market got through the lower tax rates introduced by Donald Trump. So we've got that as a backdrop. Now, also the share market has also lost confidence because of the trade wars that are going on. Now, interestingly, over the weekend, China and the US met and they've put a truce in place. Well, it's short term, so it might be a false dawn, but we have a truce in place, which means the US aren't going to increase their tariff percentages, and China's promised to buy a significant amount of US goods. Now, what does that mean? Well, we've definitely seen the stock market, have a very, very good couple of days, and that's potentially put some confidence back in to the broader stock market and hopefully the broader economies around the world. But it is short term, and we need to get through this Christmas period, which is going to see some significant changes. Now, in addition to that, what's also potentially put some confidence back into the market is some of the commentary from Jerome Powell, who's the Federal Reserve. Now, let's face it, the Federal Reserve pretty much controls monetary policy around the globe. So when he talks, everybody listens. Now, there was some change in his language from previous meetings where he was talking about that, neutral rate position, we were some way off, to now some of that commentary being that we're closer to that neutral position. That's also put some confidence back into the market as well. So that's why we've seen the last few days as being very, very good days on the markets. Now, let's get back into the Australian economy, and why is the cash rate remaining on hold? Well, it's still the two fundamental reasons. First one, no wages growth. We haven't seen any wages growth, and inflation's really low. So I'm a bit of a broken record on those 2 points, and I'll report back to you when there's going to be some changes in that particular area. Now, my big question is really around what's going to happen over the consumer spending period of Christmas. Now, we have nervous consumers, and that's been reinforced by credit growth, especially housing credit growth. Now, we've only seen 0.3 of 1% growth in October, which means that our annual rate of credit for housing is the worst it's been in 5 years. So we do know that this housing correction and this housing slowdown is going to have a significant impact to the broader economy. So we have some positive news in the economy around sort of low unemployment, but I think this is going to be a drag on the economy. So I'm not as optimistic as some are. Now, yes, we've got the infrastructure spending, but if the global economy slows down and our raw material costs such as iron ore and all the things that we're selling globally start to reduce in value, that's, obviously tax receipts. And the other big factor that we need to start thinking about right now is the federal election. So we do know that in the last month we saw Scott Morrison, our Prime Minister, announce that he's going to move the budget to early April, which sort of signals that we're in for a May election. And there's some positive news in that in regards to potentially getting closer to a surplus. But with a change of government, more likely than not, and potentially a government that may not necessarily be as pro-business as what we see the Liberal governments of the day are, we're going to potentially see some confidence. So we've seen some green shoots in regards to business confidence and some capex spending planned for next year. But during an election period, everything sort of slows down. Everyone needs to know, how bad it's going to be, and that's going to impact the broader economy and GDP. So it's whether we recover from that position, especially given some of Labor's policies are quite restrictive. We also know about the negative gearing and capital gains exemption policies as well. So until we see what comes of that, I think there is going to be an overall confidence punch to the economy. And that's worrying for me in terms of where that sits. So hopefully smarter heads will prevail. We're already seeing the Reserve Governor talking about he's very aware of this credit crunch going on at the moment, and he potentially will hopefully influence the politicians around making sure that we remain robust in allowing people to access credit. Because if we do that, then the economy should be able to get through this lumpy period and hopefully move into the forecasts that the RBA have suggested, which are improved forecasts for our GDP and the overall economy over the course of the next couple of years. Well, there we have it. That's it for this year. There's no rate announcement in January. The next rate announcement will be in February. So let's watch Christmas closely and see the sort of sales numbers that are coming through. And let's hope everyone doesn't buy that on personal credit, because that's the other problem we have, which is household indebtedness. So we want to make sure that people are using actual cash and not splashing too much on their credit card. So be sensible over the Christmas period, and I look forward to seeing you at the next RBA update in February. Thanks for watching.